Hello from Trend Signal for our review of the data and events the week beginning the 9th of January, the first full week of the new year. Just 11 days to go before the inauguration of President-elect Donald Trump on the 20th of January. Take a sharp intake of breath. Markets made new highs again Friday post non-farm payroll, which the data wasn't really not enough to deflect current thinking either way, really. The actual data came out sort of as expected, although the actual monthly data was lower than expected, but there were revisions. If I just quickly go to that data now, the number missed by about 20-odd thousand, but in fact the previous month was revised up from 178,000 to 204, so an improvement of 26,000 there. So as I say, not too much there to upset the apple cart either way. Interesting, the Dow just 35 points or so short of the psychological 20,000 level, and it is just a psychological level. It doesn't mean anything else, really. When I first got back into the business, I should say, in 1983, I was trading at around 800 to 1100. So since then, and I know that's a lot of years, 30 plus, the market has risen by a factor of 18 times since then, which is interesting. Scale of things, really. Anyway, not everyone's happy. I was listening to Wake Up to Money this morning, and Meryl Streep commenting at the Golden Globes Award in Los Angeles. Doesn't seem that enamored with Trump, but then why should she? She's one of those classic Democrats that would never have voted for Donald Trump, but made her feelings very clear. Last week, markets continued their rise. Certainly when I talk about markets, stock markets, the FTSE up 67, DAX up 200. Sorry, Dow up 200, S&P up 38, the DAX was up 118. So they're all ranging between 1.5%, 2% higher. The Nikkei up 340, another 1.8%. The dollar took a little bit of a breather. It rallied and then gave up some ground towards the end of the week. So the euro actually ended up 14 or 15 ticks higher versus the dollar. Sterling was particularly weak and has weakened further over the weekend following comments from Theresa May, who indicated that Brexit would leave the EU single market and pursue a bespoke deal with Europe rather than trying to keep bits of membership, as she said. That has really undermined sterling, and sterling is very much on the slide, certainly versus the euro and the dollar at the moment. Paradoxically, numbers coming out of the UK in terms of manufacturing PMI last week were particularly strong, but the markets are more interested in what's going to happen in the future, and I think Brexit nerves are jangling rather than any great euphoria over any manufacturing data, which of course is lagged in its effect anyway. So let's have a look at the data and events this week. A little bit thin on the ground, as is always the case. The week following non-farm payroll is always fairly quiet. So let's start with the CPI Tuesday early morning. We've got Chinese CPI very early on in the morning, 1:30 in our morning. No great shakes there. It has little impact on our market, really. That is, unless it's particularly out of kilter, and it's comments that are made with it that have more an effect on the market. On Wednesday, we have at 9:30 we have the manufacturing production data out of the UK, and hot on the heels of the manufacturing PMI, one could be excused from thinking we were going to get a strongish number. We're expecting plus 0.6% following their negative 0.9%. I've got a feeling it may even be stronger than that. How that'll affect the markets, not altogether sure, but the markets are more focused on what's coming out of the mouths of Theresa May and her government rather than any hard numbers. Crude oil inventories Wednesday afternoon. We're now back to the right days for this data. Last week with the bank holiday on the first day back last week, it meant a lot of this data was pushed forward by a day, but crude oil inventories out Wednesday again, 3:30. We're expecting maybe a bit of a reaction to that massive, considerable drawdown of 7.1 million barrels. That was offset really by an increase in products, so it's not always so obvious the impact on a drawdown in crude oil but there we go. That's 3:30 on Wednesday. Then we jump to Friday, really, which is probably the most important day of the week in terms of numbers. Janet Yellen, chairperson of the Fed, kicks off the day early on, really, certainly US time, and it's all US-based stuff on Friday. She's speaking at a town hall meeting in Washington. Not quite sure what about. Anyway, there are audience questions expected, so that has a potential to create some ripples in the markets. Then we have the most important number of the week, I guess, US retail sales. There has been a sharp increase in consumer confidence in December, and I think with the conference board that collates the consumer confidence numbers, the indicator at its strongest level since 2001, although they do point out that the confidence surrounding the present situation deteriorated slightly, but the key thing is this is a leading indicator, really. Anyway, retail sales we're expecting to tick up to plus 0.5%, although seasonal factors do come into play in December, so it's not always straightforward, but plus 0.5% is what is expected. Then finally, the last bit of data for the week, the prelim reading of the University of Michigan Consumer Sentiment. Another strong reading is expected, which is probably you would expect this, bearing in mind the bullish nature of the markets, and I guess especially with the incoming President-elect Donald Trump promising all sorts of things on a more active fiscal policy, infrastructure spending, and tax cuts and the like. So there we go. That ends the week in terms of data. That's it. Thanks very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.